Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 21st of July here in 2020. We got a lot to talk about, team, so let's jump into the S&P 500 on our profile. Today was a little bit strange. Yesterday was a little bit strange. And that's not just making a random comment. That's true. Mainly because the market was up yesterday with the majority of stocks. In fact, the advanced decline line in the broader market was a negative, in fact, negative 200 or more throughout the session, but the NASDAQ was straight up. And today's session, the market was up, everything's bullish, strangely enough, until the end of the session, which we'll come back to in a moment, but the advanced decline line was positive 200. And the market closed at lows, but not only that, the NASDAQ was down just about all day. So it's really is becoming a tale of two markets. And it continues not just in the equity market, but in gold and silver, which we'll talk about in a moment. But these monsters of tech, titans of tech, or bidless beasts of tech, they just continue to drive the market order flow for the NASDAQ. And that's not true for the other indices. So those titans or monsters of tech, namely Amazon, which is up here, and we also talk about Facebook, but also Microsoft. We'll just kind of quickly go through them. Microsoft is coming down from the upper profile, coming back lower, and there's Apple. See, they're in the top decliners, right? So Apple's up here as well. And we just saw Microsoft. MasterCard actually is in the titans of tech, or at least in the top market cap names. And Qualcomm, not so much, but that's some of the names. There's Google. So those are coming down today, and that's what held the NASDAQ down on a relative strength basis and really trend to the downside when the Russell stayed bullish and well bid all day, as did the Dow Jones, until everything fell apart at the last few moments. So that's where we are. Thinking about the profile, thinking about probabilities and the little distribution curves, we still have an advantage of the bears or the short sellers in terms of positions. And that's specifically when the market is above the VA extreme and above the point of control. This is more of a double distribution, but think of it like, maybe the NASDAQ is a better example, of a probability bell curve. So this is a tight type of curve, but this is a 1 and 2, one standard deviation move above the point of control, which is a red line. So on profiles with this type of logic, like option weekly expected move with implied volatility, or just Bollinger Bands, or any type of mean reversion type of logic, when the market's above this top yellow, it favors puts or bears. Put strategies, in-out spreads, vertical spreads, things that get you long premium, long volatility, and the preferred method might be put spreads. And when you're beneath this lower yellow, and that favors the bulls or the buyers. And that gets you long premium again, but with the calls and call spreads for the market to rotate back up. And that's happened. All that's okay and well, except for yesterday's bull rally and today's morning. We still have the edge favoring the bears, which that's the dominant thesis. The alternate thesis is that we just keep being news headlined and short squeezed to the upside, but that would be lower probability, specifically on the profile. That is also true on the weekly expected move. And this is our SPX. That's up at the top. And the ES, not that much different. We're toward the upper end, maybe not quite there yet, but the probability again does favor bear type of positions at the top and bull type of positions at the lower bound. This logic plays forth into other indexes and individual equity products. So we'll take a look at that. So on the bigger picture, this is the S&P 500, this is the ES, and once again, that key level is about 3300, which may sound very strange that we are testing, touching, or probing up into it, but we aren't there yet. And the market just fell away from it in today's session. Prior pivot, 3230, and there's always Don's 3211. That happens to be the point of control. If you're playing positions, if you are not positions, or if you're holding some short positions that didn't go well today, keep holding. And that's mainly because the market still favors a pullback. Pullback at least from these pivots. That's statistical, not going to be predictive. That's the equity market. NASDAQ, same type of logic, only it made new all-time highs just recently. And that key pivot for the NASDAQ traders in simple terms, is about 11,000. And just updating our Dow chart, it is beneath this 27,000, which is key for the short term. And above that's about 27.5. If you trade the Russell, it remains the weakest of the 4 indexes. Might not seem that way recently because the Russell has outperformed, and that's in part because down here, financials, the XLF, has been an outperformer. Recently, it's still well beneath those lows. Compare that to the weakness of the tech sector, which is XLK, which made new all-time highs. So there are differences in the sectors. There's one thing we're missing, and it jumps out like a sore thumb, and it's XLE. That's energy. Not that stellar of a longer-term performer, but the big news on today's session was the strength or the bullishness in, we'll flip this around, stocks that are within the oil services, or just the crude oil type of sector, energy sector. That does include CVX, which is Chevron Texaco, to an extent Schlumberger, Occidental Petroleum, not Wells Fargo, strangely enough, ExxonMobil, and others in this sphere. So these names might not be really, really bullish, but they're bullish within today's session that had strong, actually quite some strong, trend day type of behavior within Occidental, Chevron Texaco, Schlumberger, ConocoPhillips, and ExxonMobil. So that's on the equity front. In case you missed it, things that we might not watch all the time, we do watch gold. We trade gold. We look at GLD. For the futures traders, it's GC, but GLD is right here. And that was a major trend day to the upside. But gold was up 1.25% today. Interestingly enough, SLV was up a lot more. That's about 6% in silver, the SLV ETF, and an SI, silver futures contract. Don mentioned this in his morning session. We've had 2 trend days in a row to the upside. And these trend days are strong gaps off the open, strong volume and continuity or bullish type of trades for the morning session. And that played out in today's session too, playing bullishly off of rising support. Let's pull the perspective up to the daily chart. We'll start with SLV. With the Fed printing money and the Fed doing the quantitative easing, round 4, round 5, silver is going to be a beneficiary, as is gold. Those are inflation sensitive or can be seen as inflation sensitive products. The chart shows higher highs, higher lows, and rising moving averages, strong volume. But on top of that, we have continued breakout to the upside. And that is a dramatic move. That's why it's difficult to short, fight, or fade a trend in motion. This is the short term on the daily chart, but the weekly chart shows stellar, amazing, quite impressive actually, movement from the lows in 2020 earlier to the highs of 20 per share at this point. And the same can be said with SI, which is silver. So that's something, if you are not positioned, you're probably hearing this for the first time or just recently, how silver is catching a strong bid and almost has doubled from its 2020 low. That's not the way it's happening in gold. Gold has remained bullish, higher highs, higher lows, commodities being affected by the quantitative easing and the bullishness from the Fed. So this makes sense. Right? We've had bullish type of positions in gold, GLD, and bullish recommendations. So it's joining up at the highs, but silver is catching a stronger bid. So it depends on how you trade. We do want to trade long or bullishly into trending or rising trending environments, and those are just ones that have higher highs, higher lows, and rising moving averages. That would include call spreads or in-out spreads on the bull side when the market retraces or touches lower from a prior high. We don't necessarily want to short, fight, or fade because sometimes these things can happen. Surprises can occur in the direction of the ongoing trend. Things like this, gap to the upside go, gap to the upside gold, gap and gold, right? There you go. And continuity to the upside. So these things surprise people, but the trend is to the upside. So that's the main type of market analysis or trading strategies within commodities, at least gold and silver. Oil might be a little bit different, but even it saw a bid in today's session. Breakout to new swing highs. So be a little careful. The equity market does have a little short-term bear play. That's a fade or a sell above the profile. And silver's breaking out. That's one of those you probably would have had to have held a position, a call position, ahead of the breakout on a pullback. And it may be a little too late to jump into it now, but it should perk your attention going forward. As always, be careful and be safe. This is Corey Rosenblum with tonight's Theo evening video for July 21st, 2020.